Paying for a home is a great investment, but having a home pay for itself is a greater investment, don't you agree? Real estate investment has been a hot topic for a while now, and just buying any old property expecting to make a profit is a little more optimistic than logical. What's up, thinkers? Chris Robinson here, reminding you guys to like the video before we jump into the details. And in today's video, I would like to highlight 5 tips for you to follow in order to know what's a great deal and what isn't when it comes to investing into property. Originally, this video was supposed to be a YouTube short. However, when I was writing up the script, I just could not get the video under 60 seconds without losing quality information. So be sure to watch through the full video, take notes, and while you're at it, you might as well subscribe so that you can stay financially informed. Enough talking. Let's jump into the video. Alright guys, so before we actually jump into the 5 tips in order to be successful in real estate investing, I want to be able to highlight some key reasons on why you may want to get involved with real estate investing, just so that you can determine if this is something you'll be interested in. Okay, so if you thought of cash flow, this is one of the main reasons why many people get involved with real estate investing. Because cash flow is the net income from a real estate investment, which is calculated after your mortgage payments and expenses. This will be considered a key benefit of real estate investing. However, one downside to this is if you're into quick cash, because cash flow only strengthens over time as you pay down your mortgage while increasing the equity of your property. Secondly, investing into property comes with tax breaks and deduction. This can save you money during tax season because you can deduct a logical amount from all of your expenses from owning the property. Additionally, when it comes to owning property, you can most definitely expect some sort of appreciation based on many different circumstances. This can help you turn a profit if you ever decide to sell. Also, paying down on your mortgage can allow you to increase the equity of your property, which is an asset. And this type of asset can be converted into cash, which can raise your net worth, or you can just simply use that cash to buy new property. And lastly, although there are many different benefits when it comes to real estate investing, I just want to end with the concept of portfolio diversification, which means that real estate investing could diversify your portfolio and allow you to expect higher returns and lower your risk with your investment portfolio. Alright, so knowing what we know now, and if you decide to move forward with real estate investing, let's now highlight the tips that I promised you guys earlier in order to be successful with it. Okay, so tip number 1 is something called the 1% rule. This is a rule in which you should consider your monthly rent to be at least 1% of the purchase price in order to be profitable. This doesn't work for every property, which is why you should do your research to find a property that can benefit from this rule. Alright, so tip number 2, your mortgage terms is essential for knowing what you want to accomplish, so make sure you get the mortgage that fits your needs because this will help you accomplish what you want to achieve. Whether that is monthly cash flow or you just want to cover your expenses, it's important to know what your mortgage terms is so that you can calculate your expectations. So tip number 3 is miscellaneous expenses. This is something you should never forget about when calculating your monthly rent, and some of the most common things people forget about is utilities and the value of upgraded appliances. Since we are focusing more on rentals rather than reselling, we want to consider upgrading the home so that the quality of the property can last longer. If you're confused on what I mean, I'm referring to how often you plan on keeping up with the maintenance of the property, and this can be anything from flooring, vents, and etc. And lastly, tip number 5 is simply your tenants. Tenants is very essential because this is the source to your income. So screening your potential tenants to find the right candidate will help your plan fall into place. And that means you want to make sure you have a tenant that can afford the monthly rent as well as have a reliable background. Alright, so that is 5 of many tips in order to be successful in real estate investing. However, this is an investment, so there are some risks that comes along with it. And let's highlight some of those risks before we conclude this video. One of the first risks you should recognize is the timely completion process. This can result into out-of-pocket costs since it could possibly take months for you to get a new tenant. This can also affect you if you want to purchase new property. Another risk is the lack of liquidity, and that comes from the results of the timely completion process. Unlike the stock market where you can quickly convert your stocks, aka assets, into cash instantly whenever the stock market is open, because of this timely process, you are unable to convert your assets into cash whenever you want them. Also, if you're not familiar with the laws and regulations within your area, you can hold yourself back from reaching your goals. Getting familiar with the rules can help you make better decisions when you want to start investing into real estate. Alright guys, so that concludes our video for today. If you found this video interesting, you might find some of these videos interesting as well. I see you guys in the next video. Peace.